Hello traders, welcome to another quick recap for right now it's March 24th, Friday. We are just right into the New York session, and the London session had been quiet. We didn't really have any important tier 1 data, and the New York session we don't really have important data as well. The main events today will be well, actually, let me pull out. I have a new template that I think is pretty good to do a daily recap. But of course, today is kind of late because I'm just getting used to it. But ideally, I am going to produce this probably before the London session opens, so around midnight New York to 2 a.m. I'm pretty much gonna type up. So what I'm gonna do is going through the major events from the previous, not the Asian session that we just had, but the one that a day before, from all the way from Asia, London, New York to the nearest Asian. So give a very quick, elaborate recap of what had happened in the market in terms of the major risk events and the sentiment and the fundamental changes. So this will be a very nice point of view. Again, this will be on my website. You can just click it's Forex Daily Analysis at enhoco.com. Everything is free. Again, this is a very good exercise for me as well. So that's why. So you get into it, you can see major event for the day. Then I will really type out what is the current sentiment, depend on the previous events, what had happened through the Asian, London, New York to Asian again, and what happened to the equity market, bond, and the WTI and gold commodity pairs, commodities, metals, things like that. Then tell you what could have happened in the next session. So basically, as I mentioned in my previous video, I am going to in the next quarter. First of all, I'm going to be away in April for the whole month. Going away for a family trip, so I'm not gonna be around, but I try to maybe produce this written analysis if I could. When I'm travel, of course I try to just get away from the market. That's the whole purpose of traveling. But when I'm back in May, I'm really going to focus on the intraday trading, and the reason is because pretty much that's what I'm doing nowadays. Trading full time. So that's the first reason. Second reason is I don't really have a good performance for my swing trade. As I mentioned in my previous video, I have a sort of challenge right now. Is I'm still figuring out how to incorporate the fundamentals with the swing setup. And unless I have something that's really good, otherwise I don't wanna, give out too much false information, or I just don't think it's a good way to. I'm still gonna do a daily elaborate analysis, so I can still give you a very general direction of the currency, according to the fundamentals and the sentiment. But I'm not going to trade swing trades myself, and reason very simple, because I'm not really good at it, and I'm working on it. If I have something nice come up in the next quarter, then I'll be more than happy to share with you. And if you have your own technical strategy, try to incorporate that with the fundamental directions or sentiment of the market. And if you get a pretty good hands on that would be great for you. And so that's pretty much what I'm gonna do with major risk event, current sentiment, upcoming tradable risk events. As you know, I trade this kind of events with deviations. And the thing about this kind of event is that it's not hard to trade when there is a surprise. It's hard to manage because you don't know how long or how far the risk events is going to generate that kind of momentum. It actually really depends on the whole point of view of the market. What is the market anticipated? What is the central bank looking at? So don't just blindly, a lot of people, including myself back then, we all just go to, Forex factories, and then we say, oh, okay, this is a red, so this must be an important risk event. This is a red, so I'm just gonna hold my trade because it's a red. I used to do that last year when I first started, and I realized that's really not the case, because if the importance of the risk event is not really depend on the color of this of Forex Factory. It's really depend on what the central bank is looking at, what the market is looking at. And as Ken mentioned, the best example was the last non-farm payroll. If you remember, the number was great, and a lot of people jumping, including myself. I got out with 10-15 pips, and the reason is because I know what central bank was looking at the average hourly earning, because they will keep saying that if the wages going up, they will have to tighten the interest rate further because the inflation will shoot up even faster. However, if that's not the case, then we will not expect more rate hikes. So a lot of people are looking at this employment change, the actual number, and of course the number is great. The last expectation of 196,000, the number was 235, so people were getting very excited. Unemployment rate is also good, it's lower than the previous. However, the most important thing was the average hourly earning. That was what the Federal Reserve was looking at, and was unfortunately lower than expectation. So we did see an initial spike, 10-15 pips, but it soon faded out, and a lot of people got caught up and end up losing. So that's something I have to be careful about, and this is something I'm still learning myself as well. For example, I did trade the British pound retail sale yesterday. The number came out very positive, all positive deviation. I got in, and I should have just got out. And I'll go over that later on with the chart. So basically, I will put out my game plan for the next sessions, London to New York, what am I looking at, what currency I'm looking to interesting to buy or sell, or maybe if there's nothing interesting, I'm pretty just stay on sideline. So that's pretty much, I think, the template I'm gonna use. And again, April, I don't think I'm able to make any video at all. So back in May, we'll see if anything come up. But pretty much, I try to write this analysis. So look at the major events yesterday. Doesn't really have anything. You can read it. I'm just gonna go over very fast. The most important thing is that the Congress, U.S. Congress, was going to pass the healthcare bill, and they failed to do that because the Republican couldn't get enough vote. And the impact of this event is very simple. It's not so much about the bill itself. It's about the ability of Donald Trump, because if he cannot pass a bill in a Republican-controlled Congress, that just shows his inability as a president. So if that's the case, the market start doubting what's going to happen to all his promises. All the infrastructure plan, all the tax reform, all the fiscal policy stimulus, all the budget, all those things will most likely not realize. If that's the case, the market will start dumping US dollar, because the US dollar, or even the stock market, had been quite well supported in a very good uptrend, all because the expectation that US is going to a fiscal stimulus. So if the market realized that a simple healthcare bill in a Republican-controlled party couldn't even get passed because his own party members do not support him, then that's a very worrying sign. So that's why that's the whole basic backstory of why the healthcare bill is important. So of course the market was disappointed because the bill actually gets postponed. Republican whip that cannot get enough votes, so they decide to push out, because the worst case is the bill just failed, right? So rumor had it it's going to be today, Friday afternoon, New York time. I'm not sure. That's what I read. So we'll see what happened. Basically, Trump says he gets enough negotiation already. So the thing you have to understand, that market is very fragile right now. We will really depend on what happened to that event. Other than that, New Zealand had a trade balance very negative, minus 18 million versus 160 million expected. Better than previous, but still, really way below expectation. So of course, New Zealand had been sold off. Not only that, because we are generating right now, we were at a risk on sentiment with the Asian equities all up. But right now, at this time, heading into London, the all equity, European equity were all down, all in the red zone. So right now, of course, New Zealand continue to be sold. And my game plan was to sell New Zealand, which I'm in one of the swing trade right now, which I'll go over. And I'll tell you, and also another game plan was US dollar. If the House of Congress pass the bill, then that will be a strong momentum for US dollar. You can buy against Japanese yen or something else. It's really depend on how the equity market perform at that time. On the other hand, if the Congress fail to pass the bill, you can sell US dollar against Japanese yen because we will have a risk of sentiment. Another thing that more in the swing base, I shouldn't use that word, but it's just more in the long-term base, is British pound. So what I'm looking at is that next Wednesday, Article 50 is going to be triggered. So basically next week will be a very volatile week for British pound. I think market will really once again realize the impact of Brexit when it's realized the Article 50 has been triggered. I think the downside pressure is large, so we should see British pound drop. So my game plan right now is trying to price into that event. You could get into pound yen. I tried to get into it. I tried to get into it previously. I missed by a few pips. It did drop as I'm speaking right now. But we'll see what happens in the New York session later on. If I can get a nice level to get in pound yen. If I did get in, I pretty much like to hold it all the way until the Article 50. Cable is also good to short. So another thing you can do is if the House of Congress did pass the healthcare bill, you can short cable and hold it all the way till next week's triggering of Article 50. That's my game plan for these sessions. And again, apologize. I know it's very, very late for this kind of information. I did finish typing. I just didn't have time to record it. But anyhow, it's just the first starts. So let's take a look at the where we are right now. So this is very messy. So I don't wanna redraw things because I already draw. Okay, I use these charts better. It's clean. So yesterday I did took pound New Zealand upon a good retail sale. I actually took pound yen first yesterday. So what happened is I took pound yen upon a good retail sale. I think it was this line, as you can see, huge kangaroo tail. So I took it. I got 20 pips. I did not take a profit. But I set my stop loss to break even, and I got out at break even. Now that was supposed to be the end of the trade. However, I was greedy and I realized I should not have taken pound yen because Japanese yen was still very strong yesterday. So I was thinking, okay, I should take pound New Zealand because New Zealand dollar was way much weaker, sentimentally speaking. So I was trying to get into a trade that should have been done already, right? If you want to trade these kind of risk events, you better get in the first 5 minutes. If you are not in, it's not worthwhile to chase it. Basically, I chased the trade. I got in again with this green candle at a very high here. Of course, got stop out because my stop loss is very tight, 30 pips only. Now you can say, oh, this thing keep going up, but this is nothing to do with these risk events anymore. It has everything to do with the New Zealand dollar weakness, which came from the trade balance. So really just looking at this trade like that, was a terrible I wouldn't say terrible management because I shouldn't even take it in the first place. I was being greedy, and also, sometimes you can get into risk events later after the risk events, but that risk events have to be very important. Now, retail sale is important, but it's not the main catalyst that Bank of England is looking at, or it's not even the main catalyst that the market buyer is looking at for British pound, because anybody who is holding British pound will have to be worried for the next week's triggering of Article 50. Like if you are in British pound and next week very likely they are going to trigger the Article 50, that's a big event going to rattle British pound. I wouldn't say it's going to go down for sure. It might, completely shock the market. But all is that it's a big enough risk event that you better be prepared and protect yourself.